US core inflation, often a bellwether for longer-term inflation, rose last month, bolstering arguments by the US Federal Reserve that interest rates may need to remain higher for longer. Prices rose 0.3% during November, while the year-on-year core rate remained flat at 4%. Now, China is leading declines today among Asian markets, and European stocks are heading for a mixed open ahead of a Federal Reserve rate decision today. The Fed will most likely hold its benchmark overnight borrowing rate in a range of 5.25% to 5.5%, but investors will be analyzing Chair Jerome Powell's commentary for clues on how soon rate cuts can be expected. For more on this now, let's bring in Mike Ingram. He is Senior Market Strategist at Active Trades and joins us now from London. Thank you very much for joining us today. Right, Mike, core inflation, 4%. That's not too high in the grand schemes of things, but we did see that it's on the rise now. Once again, what is this telling us?
Well, I think simply it's telling you that the US economy has largely outperformed expectations during this year. Going into the year, many expected the US to slip into recession. As it's going to turn out, it's probably going to grow 2.25% to 2.5%. But what's come along with that is a stronger labour market. It's not far off all-time lows in terms of the unemployment rate, and also stronger wage demand. I mean, the Atlanta Fed has wages still growing in the US at more than 5%. And that's not really consistent with the Fed's long-term inflation target of just 2%. It means that employees have got more money to spend. They're going out, they're spending pandemic savings as well. And that's helping to sort of drive cost-push inflation up, services inflation and core inflation. So yeah, 4%, yes, it's come down quite a long way, but it seems to have plateaued at this level, and the Fed is not going to be comfortable where things are right now.
Right, so the Fed's not going to be comfortable. And what do you expect from Powell's press conference later today, and not just on the inflation outlook? I mean, how will the dollar react to all of that? How strongly do you think Powell will try to push back those ideas that rates can be cut as soon as the first quarter of next year?
Yeah, I think Powell's going to have to push back quite aggressively, because if you look at the Fed's most recent thinking on rate cuts and inflation, which was in their September forecast, they'll get refreshed today. They were seeing something like 2 quarter-point cuts during 2024 in the second half of the year. And the market's discounting 5 quarter-point cuts. So there's a big gap at the moment. Yes, as I say, these forecasts are going to be renewed today. But I don't think the Fed's likely to move that much from what it previously forecasted. So there's a big gap that needs to be addressed. Powell's going to have to push back quite hard. In terms of the dollar, well, we did see the dollar weaken through most of November. On the dollar index, it came down from 107 to 103. We're currently at 104. So I think there's probably some scope for a bit of appreciation on the dollar there on the back of the Fed being quite hawkish tonight.
Mike Ingram, thank you for your analysis on the Fed today. And now let's go to the top stories from around the world. The UK economy has returned to contraction in October as a result of 14 back-to-back interest rate hikes by the Bank of England. GDP shrank 0.3% compared with the previous month, following a 0.2% growth in September. The country's dominant services sector was the biggest contributor behind the fall in output. Argentina has announced it will weaken the value of its currency, the peso, by more than 50% against the US dollar, just days into President Javier Milei's term. The move is the first step in Milei's campaign to fix the country's worst economic crisis in decades. The government also announced cuts for new public work projects and reduced energy subsidies. And the International Monetary Fund has cleared the first review of Sri Lanka's $2.9 billion bailout. The fund agreed to provide $337 million to the Southeast Asian island nation as it suffers its worst economic crisis since gaining independence in 1948. The second review of the bailout is expected to be completed in the first half of 2024.